Hey everyone, Longacres Finance here with an update on my dividend portfolio for the month of March 2021. Let's start with the most important part, the performance. My portfolio was up 4.65% during March. For comparison purposes, the S&P 500 total return for March was 4.38%. So my portfolio beat the broad US market by 27 basis points. To see exactly how my portfolio changed during March, let's take a look at the beginning and ending market value. I started the month with $84,350.58. I contributed $657.30 during the month. The portfolio paid $158.06 in dividends and grew by $3,775.26 in capital appreciation. This all brought the portfolio to an ending value of $88,941.20 at the end of the month. A pretty solid month if you ask me. On a year-to-date basis, the portfolio has a total return of 7.32%. That is 1.14% higher than the S&P 500 total return of 6.17%. I'd like to see a long-term double-digit growth rate for this portfolio on an annualized basis, so it's pretty nice to be up over 7% just after one quarter. Of course, the stock market is unpredictable, so who knows what the return will look like come year-end. At the end of March, I owned 92 unique dividend-paying stocks that accounted for about 80% of the portfolio value. The other 20% is spread amongst 15 exchange-traded funds that give me exposure to growth stocks and certain investing themes. Some of these funds pay dividends as well, and some do not. For me, this blend of dividend growth stocks and non-dividend growth funds fits nicely, but in the long-term future, I imagine that will change. As I near retirement, I intend to transition more of this portfolio into higher-yielding dividend stocks. As stated earlier, I received a total of $158.06 in dividend income during March. This came from 53 individual stocks and funds. Many of the dividend growth stocks I own pay small dividends but offer faster dividend growth. And since I am not relying on this dividend income right now, I am content with receiving a smaller amount today for the trade-off of getting a larger dividend amount in the future. The largest dividend amount I received in March was $6.72 from Principal Financial Group, and the smallest amount was 18 cents from my UFO ETF. The dividends received in March bring my year-to-date total dividend income to $323.11. for an average of $107.70 per month. All this money goes right back into the dividend growth stocks in my portfolio, based on which position is most undervalued to my target allocation. I set my target allocation each month based on my quality dividend stock watch list. Link at the top if you're interested. There were only 4 dividend increases in my portfolio during March. Applied Materials increased its dividend by 9.09%. Dollar General, one of my new recent additions, increased its dividend by 16.67%. General Dynamics increased its dividend by 8.18%, and Williams-Sonoma increased its dividend by 11.32%. So the average increase for the month was 11.32%, and my average increase for the year is 11.99%. This is well above my target of 10% growth per year, with 33 dividend increases already announced this year. Let's take a quick look at my buys and sells during the month. Seeing how I wanted to add the new ARK Invest Space Exploration ETF to my portfolio, I decided that the best route to do this was to rebalance all my exchange-traded funds. In order to do this, I trimmed my TOK, YOLO, VGT, and VUG positions to raise capital, and spread that capital around, mainly to ARKX, the Space Exploration ETF. But I also shored up some other positions, like the other 2 ARK funds I own, and the BETS and AIQ ETFs. The added capital to Rocket and UFO primarily came from contributions into the portfolio, and just a little bit from this rebalancing. As for my dividend growth stocks, I added capital to 15 stocks during the month of March. The main 2 were SS&C Technologies and CME Group. I use an automated calculation to determine which stock I should add funds to. It's based on my target allocation that is set each month based on my quality dividend stock watch list. Basically, if a stock ranks high in my watch list, it gets a higher target allocation. And there is a little boost for potentially undervalued stocks based on dividend yield theory. You can probably see that the net buy amount for this month is a little over $1,000. Yet I only contributed about $650 and received another $158 in dividends. The difference comes from Sherwin-Williams and its recent share split. Since I held a fractional number of shares, I ended up receiving some cash in lieu of the split for the fractional number of shares. Rather than put that money back into Sherwin, I decided to let my automatic system decide where the funds should go. For me, this automated process works great. I don't have to personally decide where to invest my money, therefore limiting my impact on the decision-making process. Whether that is a better approach or not, only time will tell, but I'll keep using it until I come across a method that seems better to me. Every investor is unique and has their own process for investing. There are no right or wrong approaches, so long as you're content with the results you get. And when you're not, then you can start looking for a better approach. Let's wrap up here with a few goals or targets for the year. If the market continues to climb, I'd like to cross the six-figure amount in this portfolio. It seems very doable based on my current contribution amount and with a little help from Mr. Market. I'd like the total dividend income amount to increase each quarter. I've made some moves in the portfolio earlier in this year, so this may not prove to be the case. Also, a few of the funds I own don't pay consistent dividends, so that could play a factor here as well. And goal number 3 is to finish the year with an average dividend growth rate above 10%. So far I'm on pace, but there are still many stocks that have yet to announce an increase. That's it guys, thank you for watching, see you next time.